again, Maverick traders. Welcome out to your market roundup for January 13th. Corey here with you. So let's take a look at markets. Some meaningful news out today. We'll talk about what sectors are heating up and which ones are cooling off. And then, of course, going to highlight our very best trade ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we dig into the markets, you'll notice that today was sort of a sideways day. The Dow was up slightly, the NASDAQ, S&P more flat, Russell more flat, but I think what was happening below the surface and really the gap and then subsequent bounce was more interesting. Oil has been on a tear to start the year, up another 2% today. Gold was down 1%, but we're definitely seeing some of what we talked about at the end of last year, which is this January effect. So markets gapped down, but then they rallied up to finish at the resistance zone. We'll look at that on the chart. What is the January effect? Well, it's basically, in a nutshell, what was weak becomes strong, what was strong becomes weak. And it's really that what was strong becomes weak. That's the most powerful piece of it. It's not always the weaker becoming strong, because the reasons to buy are less than the reasons to sell. People have positions in a lot of the best performers, and they want to delay the taxes and then sell in the new year. And so we certainly have seen some of the outperformers become the underperformers. So here's the S&P chart. Speaking of outperformer becoming underperformer, notice how the S&P is down so far year to date, but look at the level of support here that stretches back. This has been a level that had held for some time. It was, in fact, if you take this chart back even further, it was resistance in the past, then it became support, see how we bounce, support, and then the breakdown. Remember, just last week we talked about this descending triangle and how we were up at the top end of the range, and it could go either way. We could break out higher, or we could come down and break down lower, and until it broke, we wouldn't know for sure. Well, it broke, and it broke to the downside. Notice how right here last week it reversed. The very next day we talked about it, reversed off of the resistance. This descending triangle, we talked about the big bounce in the ball, and then each subsequent bounce is smaller until you fall off the table. Look, this is my expectation, was that this was likely to break to the downside. And even though we've broken support, I would still anticipate more downside is probably coming. So today we gapped down, and then we pretty much rallied for the rest of the day to recover and even finish just very slightly higher. But call me not convinced. I wouldn't be shocked if you bounce for another day or two, but ultimately I would expect we challenge still some lower prices in the coming week. The NASDAQ chart details that as well. Does today's rally derail the bearish trade? Does it say we're off to the races to the upside? I don't think so. You could bounce for a day or two, but then probably going to break lower. Now notice the NASDAQ is relatively weak compared to the S&P. If you look at some of the weakest components so far year to date in 2015, they are 2025. That was a rewind of 10 years ago. What's weak so far this year? Well, how about Palantir? It's one of the weakest stocks in the S&P 500. It was the very best stock in 2024. So this stock was up a ton in 2024, and so far in 2025, it's down 18% year to date. This is a prime example of what we've been talking about in terms of this relative weakness in the best performers, and the NASDAQ fits the bill. So if we look at the Russell, you've broken support. I mean, again, you could bounce for a couple of days, but unless we were to really start to get above some moving averages and start to sustain up here for a few days, maybe a couple of weeks we'll call it, I just don't think that that's the path we're likely to take. So today, more example of what was weak being strong. Energy continues to be one of the better sectors so far this year. The tech trade, some of these large cap tech names, Nvidia's of the world, they're the underperformers. So it's this perfect January effect of what was weak becoming more strong, what was strong becoming more weak. It just was likely to occur following such a robust rally for the stock market in 2024. So, where do we hunt? Well, we'll continue to hunt bullish trades in stronger areas, bearish trades in weaker areas, but what makes sense on the upside is more of these energy type of names. Here's EQT. This is one of the largest nat gas producers in the world. EQT is making new highs even as the market struggles. This is relatively strong compared to its industry, to its sector, and certainly to a market as a whole. EQT for even more upside seems likely. Oxy, this is an oil play. Oxy again breaking out to new multi-week, multi-month highs, making a new high today. You can see the reversal that's been taking place, and again, it's not going to be a straight line. You'll get some pullbacks, you'll get some consolidations, but OXY got to be considered. Now, what about on the neutral side? Neutral trades are always a little harder for me in terms of I want to pick my spots more carefully with neutral trades. It's just a harder thing to predict, but UNH fits the bill of a lot of things that I look for. First, it went through a volatility surge. It went through what I call an unknown event. Most things that we deal with in the market are what we call known unknowns. A known unknown happens all the time. Tomorrow, they're going to report PPI numbers. That's a known unknown. We know it's going to happen tomorrow at this time, and everybody's ready for it, and everybody's anticipating the number and have made their projections. We just don't know what the number will be. Tomorrow and throughout this week, we're going to get earnings reports from Bank of America and Citigroup and Wells Fargo and so on. We know the date and time that each of those companies are going to report. So it's a known unknown. We don't know what they're going to report, but even that is pretty well detailed. You know, the analysts are following it, the company's giving guidance, so on and so forth. United Health didn't have a known unknown. It had an unknown unknown. And when those happen, it cannot be priced in, which means more volatility, more follow through, more everything. So, what was UNH? Well, it was a horrible news story, right? Their CEO got gunned down in New York City. That was unknown. There's only one human. I guess conspiracy theorists might believe that there's a few humans or whatever that knew. But the point is, it wasn't scheduled, it wasn't planned for, the market was not prepared for it. And then it still had all the unknown of, well, what does this mean for the company? Who's going to be the new CEO? Was the CEO mixed up in something? Is the company in the middle of fraud? Is the company doing things that are, not good for their customers? Is that going to be brought to light? Is there going to be more regulation? So you see how not only did we not know the date and time, markets could not be prepared and not be pricing it in, but there are all these question marks that come up after. And so it fuels, when you have unknown unknowns, it fuels huge volatility events. Here's the reaction of the stock post the CEO, crisis, right? The fact that he was shot and killed and so forth, and then this company, not only was that not planned for, but all of the question marks that come with it, and you can see the reaction. So that's a huge volatility event. Okay, we went through the volatility event. And then what tends to happen is the news goes somewhere else. People are sick of hearing this story after a few weeks, and it dies off. And the company can kind of rebound some of that, but some damage has been done. And so after you have the big volatility event, what often happens that follows is what? What I would call a volatility compression. a slowing of volatility. So what I'm anticipating is this type of pattern. We're currently in the ramp, and then it goes down and up, and you get this symmetrical triangle type of pattern. And that's what I'd be anticipating about UNH. So big drop, maybe it rallies, maybe it drops and rally and kind of, I don't run out of room, but sort of looks like this by the time you're done with this thing. And that can take a few weeks to play out and is perfect for neutral trades because, if we're making this move and then you subsequently fall and then the next peak is lower than the prior peak and the next low is higher than the prior low, and this is that volatility compression. See how it's getting compressed? It's getting squeezed down. It's perfect for a more neutral trade. And because we just passed an unknown unknown, this was when it was in its volatility cycle. The options market hasn't adjusted, and so options are still priced pretty darn expensively as you're right here somewhere, right? This is where we kind of think we're at in UNH's chart, is we're still pricing in a huge volatility event, but the subsequent price action is going to actually quiet down some. It's still going to be volatile, and there will still be some choppiness back and forth, but it's pricing in too much volatility compared to what the stock will actually realize. And that's what you look for in a neutral style trade. So potential trade ideas would be, if we draw a risk graph here, you could do a butterfly. A butterfly risk graph would look like this. You'd have low risk, high reward. You could do iron condors. You could do, it would, well, actually, I drew a long iron condor. You could do a short iron condor, right? Which would make more sense, like this. You could do all sorts of trades where basically if it stays within this range of prices, you're going to create some profitability. If the stock is too low or too high, well, then you're going to lose some money out here. But you could create a big range of, price range out here to be profitable. So iron condors, butterflies, etc. could work for that. CMG, this I've got on the bearish list. Chipotle Mexican Grill, look, not too complicated. It's just in a bearish trend. It's broken support. I'd love to see this bounce for a few days before initiating a bearish trade. Maybe up against 58. A little bounce up underneath 58, and then subsequent reversal is what I'd be looking for. EA, Electronic Arts, same type of idea. I'd like to see this bounce first, but maybe it bounces up to about 145 per share is about where I would expect a good bearish entry would occur. So for me, I think with the rally off the lows, the market's probably going to bounce for a day or two, a couple of days, but I think that's probably a shorting opportunity for some of those setups. So markets bounced into that key zone. We've got CPI out on Wednesday. Earnings are right. We're moving right into the heart of it. We got Bank of America, Citi, JP Morgan, Schlumberger, Taiwan Semi, United Health, and Wells Fargo. Notice United Health with that earnings report. Again, is it going to gap on earnings? Yes, but if you give it a few weeks trade, it's pricing in huge moves. And if it stays in that volatility compression, even through earnings, you're going to get a volatility crush in the option prices and a really good profit in your neutral trade. So it's an interesting setup, I think, technically. Would I expect a gap in the stock? Absolutely. And that can still work within the confines of a sideways trade. Just those prices in the options are quite expensive. So you can build some fancy structures that way. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.